Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Wednesday. Hump Day. Yeah, 800-951-0592. That's our toll-free number. The physical delivery of wealth insurance. Legal, lawful, constitutional money. Heck, let's not lie about it. Biblical money. The only thing that's been money for thousands of years. It doesn't go to zero. You don't need seasonal adjustments or any other kind of nonsense or tools in the toolkit. If you don't want inflation, have real money. It's really just that simple. allamericangold.com is the website. And Jason, I'll just tell you right now, I am dazed and confused. We've had the most incredible seasonal adjustments, maybe in the history of seasonal adjustments. It started late Friday with inflation data carried into yesterday's number. Today we got retail sales, and it was smoking hot. I mean, you're talking about this is what we have to believe today. Ready? I can't make it up. This is just, hey, listen. This is what they put out there. Retail sales, it was the best number going back to when they gave everybody a check in March of 2021. That's right. Better than any month in 2022, better than any month going all the way back to March of 2021. Of course, seasonally adjusted.
I don't know, Joe. It's, there is,
what do you do with that?
Yeah, I see some people out and about doing stuff, Joe. The question you got to ask is, if there's any truth to the number, how did it even get in that neighborhood? If you want to believe the number at all. And to me, Joe, I wonder how many people are cashing out their house as a piggy bank, and how many people are getting those credit card offers in the mail and just saying, hey, you know what? Let's just load it up before we bankrupt ourselves. I mean, maybe we're getting ready for
that. Can't work. I mean, I'm sorry. That dog doesn't hunt. I mean, this is so ridiculous. It's so ridiculous of a number. But again, though, you know what's funny is I had to dig to find out why. Because I actually, not that I do it, but I had to. I just wanted to see what the idiots on TV would say. Seeing if they would say it. You would know if you only got your news from the TV. You would have thought, "Oh my gosh, this is a terrible number." If you care about inflation, if it could actually be believable. And the funny thing is as I'm looking through other numbers, we had oil inventories, massive crude bills, and there was factors. But you know what? I look at gasoline demand. Gasoline demand will tell you a lot about what the economy's doing. It stinks. It's not good. So it's like, well, wait, how those things just don't jive. We look at credit card balances ballooning. We look at we've talked about it. Goldman Sachs now is going to get rid of their credit card division because they were in subprime. No one's paying the bill, and yet somehow I get March of 2021. I get that. I mean, everybody was getting checks. Don't go to work. Here's a check, right? Here's some more. Here's other money on top of that money. I mean, they were just handing it out. That didn't happen in January. It's that incredible. Here's the good news. I'll call it good news. Listen, gold and silver fell on that, and rightfully so. They should have. Absolutely, they should have. Right? I mean, the problem is now what? Because all of a sudden now, Jason, not only are we getting the rate hike in March, not only are we getting the rate hike in May, now they're saying, hey, there's a 60, 70% chance there's a rate hike in June. And based on that number, there better be a rate hike in June. You know what I'm saying? I mean, it's idiocracy at its finest.
What would all those insurance checks be in cash for all those warehouses that were being burned down last year? Maybe if they all cashed their checks in January, would that help that number?
I mean, if those checks would have went to the people that work, then maybe, but they don't, right? I mean, that goes to some big corporation. I mean,
Well, I mean, let me say,
I'm
these
just
warehouses,
sitting there.
these warehouses burned to the ground. I mean, do they just fire all the employees, or do they still get checks? I don't know. How much? I'm just trying to. I'm trying to
I'm
help
sure
out
that's
the fake
handled
numbers.
through. That's probably handled through workers' comp or something like that. And again, I don't know. Don't quote me on that, but that'd be my guess.
Well, Joe, you know me, it's hard to believe the numbers anyway. So I was just trying to play the other side for a minute, try to give some excuses to why it makes sense.
I mean, I can Hey, listen. Okay, it was a little better. No, and again, it's all seasonally done. Here's the problem: they don't give me the information, and I tried to find it. Oh, I'm sure it'll come out in the next week or two of what the adjustments were. So I can't even tell you what it was. Now we know that inflation year over year was up 6.4%, what they're willing to admit to. They said retail sales were up 3%, not 3/10, 3%. And again, just way above anything that anybody was factoring. You do the usual stuff. Take out autos, it was up. Take out auto and gas, it was up. What they call the core control group was up. All of them above 2%. And it's just, I guess when you go back and you look at what was happening in these numbers, either everybody all of a sudden landed into a bunch of, everybody won the Powerball, or, well, hey, we just need to make things look better than what they are. Another reason to get rid of seasonal adjustments. We'll be back after the break. (800-951-0592) Patriot Radio News Hour. Joe and Jason on this Wednesday. Quick look here at the markets. As expected, with this retail sales number, the Dow, the S&P, the NASDAQ are all lower. Unexpected, crude oil's lower. Why? Well, because apparently people are driving less, which kind of doesn't make any sense. Gold's down 20, 1835. Silver's down just under 30 cents at $21.60. This market recap brought to you by our friends at YRefi. You know what? You don't have to play this game if you don't want. You don't have to. I mean, it is really boggling the mind. How are you supposed to invest like this? Seriously. I mean, this is why. First of all, you need Joey. You got to have a guy in your corner. Then you got to have other options. You got to have your gold and silver put away. You know that you have to. It's a must-have. But investYRefi.com, up to 10.25% returns. It's month after month after month. It doesn't care. I don't care. Seasonally adjusted all you want. Raise interest rates every meeting this year. We don't care. Cut them all. Go back to go to zero. Quantitative easing. It doesn't matter. InvestYRefi.com. That's the word invest, the letter Y, REFY.com, or 888-YREFI24. And remember, you got to have at least 50 grand. You can use existing IRAs. Are you kidding me? Wouldn't you love that? How did your IRA do last year? What did you lose? 20%? 30%? Could have had 10.25%. Invest YRefi, 888-YRefi24. Jason, Goldman Sachs comes out after with the huge retail sales number. They wrote that the surge in the print is due to, and I quote, pretty healthy seasonal boost. Oh, okay. Pretty healthy. Bank of America, they may have done a better job in why things were happening as far as the seasonal adjustments go. They've said, there's been a change in spending. in that it used to be a lot of people bought Christmas right before Christmas, right? That's when they did the bulk of their shopping. Apparently, Jason, that hasn't been the case, and it hasn't been the case for several years, especially since COVID. They're saying that most of the shopping now, a lot of the shopping's getting done in October and November, not so much right up before Christmas. And so they're saying that once again, they're overly adjusting. So they take that out and then they add it back in January. And essentially, you get an understated number in December. You get an overstated number and a pretty big overstated number because they said shopping patterns have simply changed. The second one, and by the way, they're saying that this was by far the biggest increase. Now, there was one legitimate reason. Let's not forget. Starting in January, all the people on I think 60 million plus Americans on Social Security, they did get an extra, 8.7, I think it was 8.7% increase in their Social Security check. I forget, I want to say maybe it was Bank of America, could have been Goldman. They think that gave about a half of a point to retail sales was the adjustment, the extra 8.7% in the Social Security checks for Americans. I could buy that. Okay, that makes a little bit of sense. But this tells you how big the adjustment was, that even with that, we shouldn't have had anywhere close to this number. I mean, this thing was so far beyond that. It gives you a scope when you got 60 million people getting an extra 8.7%, and that was barely moving the needle on how big that seasonal adjustment. The last one was a guess. People were guessing, well, maybe people were waiting for the after Christmas blowout sale, and I don't buy that one at all, right? I mean, let's face it. You're buying for Christmas. You're buying for Christmas. I don't think people are, let me wait and see if I can buy some real cheap stuff later. I don't buy that one, but there you go. That's the answer, at least given to me, as to why things were the way they were this morning.
Could be, Joe, just inflation. How about just everything costs more, so those numbers are bigger?
Right? We know that, right?
I mean, 2022 is the first year where the CPI was well over, and it was over 7.5% almost for the entire year. I mean, 2021 we had inflation, but 2022, the seasonal shopping season, these are huge upticks in inflation, and maybe just the whole thing, Joe, is just these are indications that the inflation is roaring, and maybe it's not stopping with this new CPI number. It's we might be looking at maybe that isn't going to go lower. Maybe I thought it was going to keep going lower. We'll see the next few months.
I mean, if you look at the big data points, jobs, I mean, that was so incredible of a number. Right? Nobody, even the craziest predictions were light by like 300,000 jobs. I mean, Bank of America was talking about before the end of the first quarter, we were going to have a negative 175,000 jobs a month. And they come out with this sensational number, over 500,000 jobs created. Retail sales comes in. You look at that number. I mean, just mind-boggling. Jason, that has to be, you know what? We've got all of these data points. Housing's dead. New cars. Listen to this. They're now saying that a new vehicle with rates continuing to rise, soaring monthly payments, a new vehicle is now out of reach for middle class families. You're middle class, but you can't buy a new car. No, you can't afford that. I mean, maybe you may be able to get a lease, right? That's not buying, right? Lease is a glorified renting. But Jason, this is, I mean, really hard to put all of this into context, right? You would think based on these numbers that crude oil demand would be off the charts here, right? Gasoline demand would, people are driving, I got to drive to work. I got to go here. I got to go. I'm shopping. And now, granted, I guess some of it can be done at home now, right? I mean, people are working from home and with Amazon, maybe you don't have to drive. I don't know.
Well, even in the oil markets, there's speculation or profit taking too, Joe. So it's obviously not just going to be how many people are driving. There are people that are investing in oil, buying and selling. So when this CPI number came out yesterday, it seems to me that there's going to be a little bit of extra selling going on, Joe, because people are going to get worried that this inflation is stopping.
Housing affordability, the worst on record. New car affordability, the worst in history. To your point, is inflation roaring? It looks like it. I hate to say it. I was hoping, think about what I was saying 2 days ago. Hey, I think we're going to get a better print because they adjusted all the inflation numbers higher. And I mean, it came in 6.4. I mean, barely 1/10. But that's, it didn't happen. We didn't get the number I thought we were supposed to get. And then today with retail sales, now granted, most of it's fake. It didn't actually happen. You can't seasonally adjust a retail sale. Either you bought it or you didn't. But the numbers say that they're out there. Now, granted, let's face it, the COLA thing's a piece. There's no doubt. Hey, you get an extra, 8-9% in your paycheck, in your Social Security check. Most of those people are going to spend it. And again, Jason, that tells me what? More inflation.
Also with inflation, which I think there's more people that understand inflation more than they understand gold and other things that we talk about. But people tend to have an understanding of inflation once they put their eyes on it. So maybe where there would be a simple amount of savings going into 2022, like a normal yearly's worth of savings for a family, well, you might as well buy it now because it's going to be more expensive next year. There's a lot of that going on too, Joe.
I'm going to tell you, listen to this now. This is the average monthly car payment, the average. And we know the rich guy go out, buy his Lambo, his Ferrari, right? And the other guys, where you're going to, I don't even know, a cheap car, what, Ford Focus, I don't know, whatever, right? The average monthly car payment, $777. To give you perspective, in 2019, the average car payment was about half of that number. Half of that number. Jason, it's incredible. I just don't know how all this math is working. I really don't.
It's really a bad time to be having debt. That's for sure. When this inflation came roaring in, Joe, it's a bad time to be having debt because it's just going to snowball on top of people, especially that credit card debt that can change every month. Like I said, the home equity line of credit, some of these adjustable rate mortgages, all these things are just going to snowball people and make it even harder, Joe. So it's quite the situation. I was expecting there to be a little lull in the inflation. I thought they would almost create a deflative situation. If that doesn't happen the next couple of months, then I still think the big uptick in inflation, we're going to have that again. I think it's going to happen again. I mean,
what was Jay Powell talking about 2 weeks ago then? What was he talking about? Remember, he came up with this new word, disinflation. Was that last week? Or was that 2 weeks ago? I get my Wednesdays mixed up. But remember, he made a whole new word. I'm going to make up a new word. It's disinflation. What the hell was he talking about?
Well, yeah, and the month over month, he's just wrong because that went up. But I guess it's disinflation. If you look at the CPI yesterday, it was 0.1%.
He knew what these numbers were before he started spewing last week or whatever. I mean, what is going on?
What did Ben Bernanke say before the housing crash? Wasn't he saying some wrong stuff too?
Now, you know what? See, that hasn't even entered my mind. This is I really was like, okay, they're stopping here. You know, if you think about where I was in early January, hey, we're raising 50 basis points in February, the first day of February, and then we were going to raise in March and May. And I said, 50, 25, it doesn't really matter, but then May's probably going to be over. Then we got all the disinflation crap. And all of a sudden, I was like, okay, well, they're only going to raise 25 basis points. Remember, I said, no. Finally, like a week before, I'm like, all right, it looks like they're only really going to do 25 basis points. And then we kind of were arguing back and forth, Jason, like March was going to be the end. And you're like, hey, it may not even be one in March. Now we're talking about rate hikes all through the summer.
And if you do it gently and softly, maybe, the markets fall asleep. They don't panic and sell off crazy. Maybe it's quarter point rate hikes for the rest of the year, Joe. And it's only a quarter point every 6 weeks, right?
Yes. It's disinflation until it's hyperinflation. Patriot Radio News Hour. (800-951-0592). Continuing a dazed and confused Wednesday. So, Jason, I got two more for you. So the New York Federal Reserve, they do a survey. They do these surveys all the time. But this is one dealing with household income. Okay, so that's probably an important one, right? Hey, how you doing, right? You guys got any money? How you think your checking account's going to look here this year? Well, it fell by the most on record, even more than the crash during the financial crisis. So the New York Fed has a survey that says household income expectations crashed by the most on record. And you're like, okay, wait a minute. Retail sales just blew it away. Everybody's got a job. And then how about this one? Home builders. Now, I think they probably talked to these home builders before the jobs number and before this retail sales number. I think they're probably going to change their tune. Their sentiment survey for February, and this is normally what they do, is they talk to them early in the month, rose by the largest amount in over 10 years, which also, by the way, they changed the way they did some stuff. So now it's the biggest on record. Now it's still negative, but it went from 35 to 42. Anything under 50 is negative. But Jason, the big factor for the home builders, hope, because they don't think that mortgage rates are going to go much higher. I don't know that I don't know that they feel that way anymore.
Yeah. That's just loot. I don't know why they would. I don't know why in the last year that the home builders would assume anything. We're guessing and we're trying to put the information together as best we know, Joe. But I don't think with this inflation that came on in 2021, I don't know why anyone would assume that these rate hikes would just simply end. I was thinking they were going to stop, and maybe if things blow up in the markets, they would reduce the rates. But Joe, I didn't assume anything. I mean, the way I look at it now, I see the rates never going back to zero for a long, long time. I think they're going to have to correct this 0% madness they've done the last 15 plus years. I think this is the way they're going to try to correct it with whatever means necessary. So I don't think zero. I'm starting to think, Joe, that zero is never coming back, or not coming back for a long time.
It's going to be rough. This probably should make sense to me. I probably shouldn't be this confused. I get why the home builders felt good. Jay Powell was talking disinflation. Come on. Just gave the big speech. And then, of course, wait, we're changing all the data, so that wasn't true. With the amount of money created, we probably were kidding ourselves, Jason, that inflation was going to be this easy, right? We were probably kidding ourselves. And again, shame on us for even believing anything that comes out of the central bank's mouth. These guys can't find their ass with both hands. You know what I'm saying? They have no idea what the hell they're talking about.
And Jay
Powell should be fired right now after the bullcrap speech he gave about raising only a quarter a point and looking at the economic data we just got out on inflation and retail sales. The guy should be out of a job.
Yep. Yeah. And Joe, I don't know how they compile their numbers, that you bring to us every day, because I think they fudge things and mix things up. But with inflation, especially with the dollar losing its supreme advantage over the world, I look at the holdings. I've been watching the holdings of U.S. Treasuries by Japan and China, and I always, look at how and I was looking just as we were talking on the air today that Japan strategically took about $100 billion off their books from basically June to September, and then China took their $100 billion off from sort of August to November. And I don't have a December or January number. All I can see is the November numbers. But I finally started looking at all the other countries at the bottom of the list from November 21 to November 22. And you start seeing weird things like Ireland dumping almost $100 billion in treasuries. I mean, think about that, Joe. Ireland. And all these dollars have to go somewhere. I think the inflation is going to be hard to stop if this keeps happening, Joe. If we know what they're trying to dump. They're trying to dump all that low interest rate to the treasuries that they have. There's a few countries that their holdings of U.S. treasuries are up, but they were buying them in 2022, Joe, because there's actually some interest to be gained, right? So I think they're gonna have to cycle all that 0% stuff out of the world marketplace, and this could take a long time, Joe. This inflation could be hot for a while. So I don't see the rate hike stopping, and they're not going back to zero, Joe. I don't even know a case where they can go to zero, because there is no need for a Federal Reserve if there's inflation that they can't control.
Well, just start looking at what central banks are doing. China smashing records. Gold imports into China were almost 1,400 tons in 2022. They're saying that, China just had their Lunar New Year. They're saying that gold sales were up almost 20%. How about John Paulson, right? Billionaire. He is very, very highly respected. He just came out with a letter to his clients saying that his outlook for this year, 3 years, and the next 5 years, there has been a significant increase in the demand for central banks to replace dollars. Jason, just what you were talking about. Yep. A significant increase to replace dollars. And then he goes on. He goes, and replace them with gold. And we're just at the beginning of the trend. So think about last year, we set a record. Central bank gold demand never been greater. Paulson says this is just the beginning. He says that gold will go up. The dollar is going down. You're better off keeping your investment reserves in gold at this point. This is a Wall Street guy. With gold, Paulson sees the potential for appreciation, recommends playing the long game. This is something, Jason and I have been talking about. I think Wall Street returns for the next 3, 5, 10 years is going to be really ugly. And by ugly, I mean, just could you imagine no returns for 10 years? That's something, Jason, that was something you were used to seeing in Wall Street before the era of cheap money. And now all of a sudden money isn't cheap anymore. Paulson, just like we've been telling you, be your own central bank. Put that gold away. Patriot Radio News Hour. We'll be back. (800-951-0592). I wonder if John Paulson listens to this show, because it certainly sounds like he does. We've been running those $20 gold pieces at 2,075, 10 or more 2,050. I've got a handful of them left. 2,050 for everybody for today. So until I'm out of them, 800-951-0592. Gold's down 20. Yeah, well, it's down 18. Close enough. Everybody gets the big price, 2,050 at 800-951-0592. So let me tell you, he goes on. He had a lot to say about the dollar. He goes, listen, the dollar is still very dominant in terms of reserves in trade. True. But it's not the powerhouse it used to be. Also true. Other countries don't want to rely on dollars as much as they had in the past. And the U.S. has enormous deficits with the rest of the world in terms of trade and investment balances. Look at the trade deficit. It was almost $1 trillion last year. $1 trillion of wealth leaving this country. We haven't run a trade surplus since 1973. He said, our trade balances used to be positive. Now they're nothing more than extremely negative. The dollar is looking to depreciate, pointing out massive money printing, fiscal spending that's out of control, previous quantitative easing, and now inflation. If you add dollars and 9% inflation, you lost 9% of your money. Treasuries aren't paying anywhere close to that. This is driving investors and central banks around the world to look for an alternative currency. It just makes sense. Wait a minute. I got these dollars and I'm buying. Listen, I don't care. They can say 6.4. It's not. Let me just tell you what they admitted to in their fake numbers yesterday. Food inflation and this is at-home food inflation. That means going to the supermarket. They admitted to over 11% inflation. 11. That's what they admitted to. Now think about if you're a country, you're China, right? I don't care, you're Europe, right? You're France, Italy, Germany, whatever, Taiwan, you're Australia, and you need to buy corn and soybeans and oil and whatever it may be. And you're paying for it and you're like, wait a minute. Man, we just keep losing. It keeps buying less and less. I mean, hey, we got 5% more dollars and yet we got 10% less stuff. Let's find something else. Let's find something else.
Right? I mentioned Ireland, right? With the Treasury holdings, they dumped in from 2021 November to 2022 November, but it looks like over 80 billion, getting close to 100 billion. That's probably where they're at now. And I just asked a few questions and looked at the Irish Central Bank added 88 billion to its gold reserves in November. At the same time, they're dumping treasuries. Check this out. Ireland's gold reserves have averaged 6 tons, a little over 6 tons from from the year 2000 to 2022. Its record high last reported was November 2022 of 12 tons. So they've doubled their gold, Joe, and they're dumping treasuries. That's just one country. That's just one country.
And there's so many, and we just don't know them all. But listen to Paulson. Gold represents a legitimate alternative to the greenback and other fiat money. Mm-mm. And with the growing fear of sanctions, countries like China recognize that the U.S. dollar reserves can be frozen. This is another big problem. If you keep your money in fiat currencies, you face the risk due to geopolitical events. Listen, we're on the precipice. Call it what you want. We're on the precipice of World War III. I mean, we really are. By the way, really quickly, we just told Ukraine they can't have any more long-range missiles because we don't have enough. I take that for what it's worth.
Maybe we need them for balloons.
Right. Well, we keep missing, Well,
hey,
we'll talk about that on the Half-Empty Cup.
Can't give them to Ukraine if you got to shoot down balloons.
China probably thinks, boy, now doesn't this make sense? China probably thinks that they have so much of their reserves in dollars. If they get into a geopolitical spat with the Western world over balloons or Taiwan or who knows what, the possibility of reserves being frozen like they did with Russia. Physical gold, there is no risk. It's like I keep telling people, don't have money in your bank. Gosh, why don't people understand it? At any point, they can lock you out. It's simple. And they don't care. They do it with impunity. With physical gold, there is no risk. We are at the beginning. He reiterates. It's the second time he reiterates. We are at the beginning of the trend. We are going to see an increase in demand for gold and inflation and geopolitical tensions, right? It kind of all makes sense, right? As people get desperate, tensions start to rise. Gold is going to appreciate versus the dollar over the next 3, 5, and 10-year basis. And I think that's exactly what you're going to see. US 20s, 2050 at 800, 951-0592. Jason and I coming right back with the final segment. (800) 951-0592. Finishing up here, John Paulson, one of those big billionaires. He's on TV a lot. Many people are expecting the Fed will start easing in the second half of the year. Not Paulson. He says inflation is going to be more persistent than what the stock market perceives. And boy, doesn't that look like it's true? He says they will raise another 50, 75, maybe 100 basis points. Then they will hold until we get the next severe economic shock. Called cryptos the biggest bubble that the Fed has created, right? Think about it. I think the Fed created it too, by the way. I don't know if that was a Freudian slip. Of course, he said with all the money they handed out, everyone threw it at crypto. The most ridiculous investment vehicle ever created. Kind of interesting. I love the thought of crypto. It's been ruined already. But it is really interesting, Jason, his take on this, which is they're going to hike and then eventually they're going to stop, but not because inflation went away.
I agree with that. And it's funny how he says the next 1 year, 3 years, 5 years, 10 years, gold will gain versus the dollar. We hit the commercial break. I didn't get the chance to say, well, hasn't that been the case the last 100 years? Hasn't gold been advancing versus the dollar for the last 100 years? Weren't these $20 gold pieces that we're now selling for $2,050? The gold is always advancing versus the Federal Reserve note. I mean, the Federal Reserve note, Joe, it's they got rid of gold because it was competing against their Federal Reserve note. They got rid of silver because because those are real money, and now their own Federal Reserve note is bad for their own system. Having cash outside their system is bad for them. Their own money, their own baby, their own creation hurts their broken down system, Joe. So this is why Joe says, get your money out of the banks, put it in gold and silver, Joe.
It's a dangerous place. Listen, it is a dangerous place. You know, I know, and I'll be, wow, we did it to Russia because they're bad. Iran's bad. North Korea's bad. Venezuela's bad. Here's the thing you don't understand. When their system goes down, the depositor is now bad. You're bad. Because if you weren't bad, why not make the depositor? You're the most secured creditor. You supersede everybody else. It's not what they did. No, they said you're unsecured, but they gave you some cool words, right? What was it like? You're the priority. What is it? As far as an unsecured creditor, but you're a priority unsecured creditor. Well, unless you have a lot of money in there, and then maybe you're not the priority.
Did they use the word super priority?
Super priority.
Super priority, Joe.
Yes.
You know, I don't know about you. I don't feel like a super priority.
Let me tell you right now, believe me, that's the last thing the depositor is. The depositor is nothing of the sort. And again, look at these numbers that I've been giving out for the last few days. It defies logic, and it tells you something is significantly broken. Especially, think about this. The 2-year note is now a whole % higher in yield than a 10-year note, and it's getting worse. You know, that's probably why Paulson says everybody's getting out of dollars as fast as they can. 800-951-0592. Gene Kuntz is coming up next.